Now, the vehicle sector in SA continues to face a sales decline due to persistent high inflation and interest rates, reducing consumer purchasing power. Here to discuss this downward trend in greater detail is the Financial Mail's editor-at-large, David Furlonger. Thank you so much for your time, David. Of course, it is no surprise that consumers are still under immense economic strain, but an almost 12% decline in domestic new vehicle sales. What magnitude of stress does this point to?
Well, every time you look at numbers, you can manipulate them a little bit. What do they say about lies, damn lies, and statistics? So if you're an optimist, you will point out that there were two more public holidays in March this year than there were last year. But that doesn't account for the scale of the decline, particularly when you look at car sales, and this is where the big pain is in your individual consumers, because car sales are down 17%. That is 1 out of 6 cars which were bought last March were not bought this time. So that is a huge loss, and that's got to be an overwhelming concern for the industry. If you look at the year so far, the market is down, 5.5%, 5.3%. It's a continuing trend. And until the election is over, until all those economic issues are sorted out, and they're not going to be sorted out in the near term, then it is a very difficult time for vehicle sales and for the motor industry.
Yeah, and also quite interesting there that you mentioned the 2 lost days because of the public holiday. But I mean, even April also, we do have public holidays. So it's going to be quite interesting for the optimist to see how the vehicle sales in April actually fare. But exports also weren't any better, David, because there was over a 27% drop in sales there. Is this a sign of a slowing global economy? Is it region specific?
I don't want to say region specific. I mean, Africa is always lousy outside South Africa.
Yeah.
If you look at our major export markets, they've got elections, they've got political uncertainty. There are still problems with supply chains. But the real problem for the motor companies here is that when it comes to exports, it seems to be 1 month up, 1 month down, 1 month up, 1 month down, because in February, exports were very good. In January, they were pretty poor. And that's very difficult for planning and production purposes when things are swinging quite as much as they are.
All right. Quite interesting there that there seems to be a stop and start situation, slowing down and increasing situation month on month. And actually just in terms of, so at this point, you can't really pinpoint any kind of structural drivers, because also I wanted to ask if, the EV demand, the EV regulations have started to filter through to the kind of export trends that we are seeing from the vehicle sector in South Africa.
Look, those EV regulations overseas are still, 11 years away when the complete ban comes in the UK and the European Union. Now, clearly, the next generation of vehicles will be more affected. There is a bit of a resistance overseas at the moment, particularly in our major export markets to electric vehicles. There's been quite a slowdown there. So I don't think it's necessarily the EV issue that's slowing down our exports. It's just general economic uncertainty and economic pressures, and obviously we've got wars going on all over the place. It's just general political and economic uncertainty everywhere.
Yeah. Is there anything to note in terms of what we saw in the different categories? Because we saw a double-digit decline in the light passenger car, new vehicle sales. But what was also interesting is looking at the light commercial vehicles, bakkies, the minibuses. There was actually less of a decrease there, I think just more than 4%. We've been talking a lot about bakkies at this point and affordability. Is there anything to note in terms of what we saw in the different categories there?
Well, if you look at bakkies and at the heavier vehicles, and I will exclude medium commercials at this stage because they are losing out very heavily. I mean, their loss is almost as big as cars.
Yeah.
because it's a category that is not as much in demand generally as it used to be. But if you look at cars, 16% or 17% down last month, and the heavier vehicles down far less. That's because although a lot of people are buying double cabs as their sort of personal passenger vehicles, they are underwritten by commercial enterprises, by farming, by business, and they still have a little bit more money. I mean, the interesting thing for me is if you talk to the banks, they will tell you that demand for cars, demand for credit is as strong as ever. But no one can afford the vehicles they want. More than 50% of claims for credit are turned down by the banks.
Yeah, that's the thing, because as much as you can look at demand, you also have to look at supply, because also the banks know how constrained consumers are. So they're also trying to figure out consumers' ability to be able to pay back those loans. So they've also just increased their credit granting criteria over there. Of course, David, NAMSA also mentioned that it took some time for the impact of the interest rate hikes to filter through to the new vehicle sales data. Of course, now there is an expectation of interest rate cuts in the second half of this year. And I'm wondering if it would be too naive to think that as soon as the Reserve Bank cuts interest rates, then that will immediately filter through to the vehicle market. Or, you know, are we just expecting there also for it to maybe only filter through next year? That it would be too optimistic to think that consumers will actually, the nervousness there will start subsiding this year already.
Many in the industry do believe that the market will pick up in the second half.
Okay.
They hope that interest rates will start to come down. Obviously, you've got fuel. One mad optimist the other day said, well, with e-tolls going out of business, then we won't have to worry about those. Well, the problem is none of us paid e-tolls in the first place anyway, so it's not really going to hurt us or, you know, make much effect. But the big thing is political uncertainty. We've got the election at the end of next month. If it's a bad result in businesses' eyes and in individuals' eyes, that's going to affect any recovery. That's going to slow down any recovery. My personal view is that any recovery will be in the final quarter of this year.
Okay.
I'm not in the majority, I have to say. There, a lot of people think it will be second half. But you're right about interest rates. It doesn't have an immediate effect. But if they can come down, and it will need more than one reduction, it'll need at least two to give an indication of what the trend is, then I think we can start to see the market pick up again.
All right. Well, we do have to leave it there, David. Thank you so much for your time and giving us insights on that vehicle market, particularly new vehicle sales. That was David Furlonger, editor-at-large for Financial Mail.